If it wants to go down there, this will stay unfilled. That means it won't come back and do that. It'll leave a small portion of it or its entirety stay open. Okay. I made that post here. It came up, went to consequent encroachment here, and stopped dead in its tracks and did not engage sell side liquidity by to the perfect tick. But there's no algorithm. Now, if it doesn't take sell side, if it doesn't take it, what will happen? This will completely fill in. It does. Does it come back and take sell side after it does this? No, it does not. So if micro NASDAQ March contract wants to take out sell side or trade to 24,892.25 and lower for the express purpose of taking the sell side liquidity, this SIBI, sell side imbalance, buy side efficiency, will not, as the 10.07 candlestick on a 1 minute basis, as the subject matter here indicates, it will fill in if it's going to leave that sell side liquidity intact. Now you question, how to know that? That's what I'm going to teach you today. Okay, so what's actually occurring here today? The market is trading around this level right here, which is an octant on Thursday, last Thursday's regular trading hours opening range gap. So we went above it. That's the high of it last Thursday. We trade outside of it, and then we draw back down in. See that? We look at the bodies. Where are the bodies staying? Right on that octant level from last Thursday's regular trading hours opening range gap. But there's no algorithm, right? I love it. Looking at this this price action in here, I was playing to see if we can get this liquidity. Why? Because that pool of liquidity was enough. It was just enough to give me a reason to maybe expect it to sweep for the wick. But if I'm wrong, it could trade all the way down to 24,854 and a quarter. And if it would have did that, I would have tried to put the stop loss, trail it down, and capture that move. But then go long, because I co-signed publicly in front of the world on the internet today that I believed that we were going to run for buy side. So I was hell-bent on taking a long to ride up to one of these buy side liquidity pools. So that was what my plan was. Now, because we have all of this over the regular trading hours chart, it's going to look different, because between this closing price and this opening price, right in here, we're going to now fill in that little gap with electronic trading price action, because it's not being displayed here right now because we're toggled to regular trading hours chart. So right here, we're seeing narrative tell me, okay, it's telling me what? If this SIBI stays open, it will take sell side, and it could go down to that one. It could do that. But if it's not going to take this sell side, then these are just going to be wicks that just go beyond last Thursday's regular trading hours opening range gap. Now, I know some of you already, your head's spinning right now, and the wheel is spinning, but the hamster just jumped off because you're like, man, this is too complicated. This is too hard. The first time you see it like this, it seems very complicated. It seems complex. It's complicated. It's too many things to worry about because you want an overbought, oversold indicator. You want an indicator to pop up and tell you when to buy and sell. I have never told you that was going to happen here. But I told you, if you really want to dig deep, if you want to follow me down the rabbit hole, because it goes way deeper than this, way deeper than this. But if you want insane precision, you want to be able to do things that nobody else out there can do, you're part of my crew to do that, does that. Okay. So now here's 9:30 opening bell. And now we have all this price action here. Here's 8:30. That's the low I anchored to from electronic trading hours. That's where that sell side liquidity pool comes in. And it stops dead on that line right there because this filled in. So that sell side is not going to be taken. That's algorithmic. That's the real fuckma, okay? That's the real shit. Dead in its tracks, it stops. So therefore, the liquidity is not going to be taken. So now we can now flip it The narrative now changes. Start looking for discount arrays that are presently premium arrays right here. So the first one I told you, watch this one. This one should start supporting price action in the upper half. It should not violate this upper half. Why? Because it's now functioning underneath the guise of a inversion fair value gap. It's a SIBI here, but because that sell side's not been taken, because that octant from last Thursday during regular trading hours, this is not regular trading hours. It's pre-market session. It's got its own characteristics. At 9:30, everything has to be in its place. The narrative has to be part of the storyline that makes sense for regular trading hours. But you're going to capitalize on running liquidity or using reference points during pre-market session. That's this low, and that's where I got it from. That's why that sell side was given to you today. It's 8:30 low. So what's below that low? Sell side. So the tweet I posted here that a couple guys foolishly said, oh, he said this was going to stay open. He was wrong. It changes its characteristic here. As soon as it went up here and closed it and it's filled in. Now that means this is not going to be taken. Now change your tune to now looking for arrays. I gave you guys the 857 SIBI. I told you that's going to act as a inversion fair value gap. I told you that this candlestick over here at 731. No, I was not wrong. You're wrong. That's going to be an inversion fair value gap. Go look at the tweets this morning. Look at the timestamps. And then this was first presented fair value gap. Now, I already know some of you are thinking, well, why can't this right here? Why can't this be the first presented fair value gap? I'm confused. Because this candlestick here hasn't displaced below the opening price. It hasn't gone down into the opening range at all. That's outside of it. So if I told you I'm bullish, what do I want to see? Displacement to the upside. What's that going to look like? Buy side and balance, sell side efficiency. Everything has its place. No cherry picking, no form fitting, no deleting losing trades, then only showing the real ones that work. I love it. What do you see here? That's the buy side and balance, sell side efficiency. In what direction? Moving higher. I co-signed I'm bullish. I'm going to look for higher prices. I gave you the buy side liquidity pools. Okay. And what did it do this for? Because it already traded down into what? The opening range gap. That's yesterday's 4:14 p.m. Eastern Times settlement price. And this is the opening price at 9:30. That black line and that black line. Where's the body stopping? Look at that. That's buying and selling pressure coming to agreement saying, okay, let's stop here and do what nobody believes in, an algorithmic turn. Perfect delivery and displacement. It displaces out of the opening range in the direction I said I was co-signing. I'm bullish now. That's going to be my first presented fair value gap. Go and look and see that that's the one I'm posted. I didn't say anything about this one. I didn't bring anything up about first presented fair value gap until I had all the context in my favor. And then I can say, okay, now it's all fitting the criteria that algorithmically price will use. Now watch. Market trades above, trades into this gap here. Sure. That's just a nice little fair value gap. It's a premium fair value gap. It sells off, trades down, and stops dead in its tracks at the liquidity pool that I said, if it's going to take that liquidity, it's going to leave this open. But if it doesn't leave it open, what is it going to do? It's not going to take that liquidity. And it doesn't. It stops right to the tick. That's selling pressure, stopping, and all full faucet buying pressure, right? Make that make sense. Silly as shit when you think about it like that, isn't it? It's stupid. That's why I laugh at all these guys. They're fucking crazy. So the market runs up, okay, and then it taps the low of the regular trading hours opening range gap. Low, right here. That's what it's doing here. And it doesn't even touch the SIBI here. That is strength. See that? That candlestick couldn't even touch it. That is in it's indicating that we're strong. Order flow is bullish. So what's the next order of business? Watch this 857 1 minute candle, which I told you that's going to act as a inversion fair value gap. It has the potential to do that. Well, look what it does. It trades above it here, it leaves it, goes into first presented fair value gap here, and then trades down. Just a little hair outside of it right there. But where are the bodies? Above consequent encroachment. That's strong. That's bullish order flow.